$112,000 Bitcoin absorbs selling pressure well. Explosive price set to create new ATH Bitcoin is entering the second week of July 2025 with all the hallmarks of a market on the brink of a historic breakout. After weathering a difficult spring, BTC futures have staged a robust recovery. On-chain data reveals renewed long-term conviction, and technical indicators are aligning in favor of the bulls. At the heart of this setup lies the critical $112,000 threshold. Breaching it could unleash an explosive sprint toward fresh all-time highs. Over the last 30 days, total open interest OI in Bitcoin futures has climbed 7%, marking the first back-to-back monthly gains since the Major price decline. In derivatives markets, rising IO, accompanied by stable or increasing prices, typically signals new capital flowing in to support higher levels. According to crypto quant researcher Axel Adler Jr., when traders add leverage in sync with price-up moves, they're expressing confidence in a sustained rally, in early green flag for bull runs. Yet, sustainable breakouts usually require more than a mid-single-digit OI uptick. Historically, open interest must exceed 10% growth alongside surging trading volume to confirm a lasting upward trajectory. While we await that confirmation, the broader context is already constructive. BTC's price base near $108,000 has held firm, creating a foundation for fresh speculative money to deploy. Complementing the OI story is the Bitcoin Futures Market Power V2.0 Index, which synthesizes open interest, funding rates, and buyer activity into a single gauge. At 22,000, the index has returned to positive territory for the first time since late May. Critically, this level mirrors the 20,000 reading that marked the April 2025 bottom, when BTC found a floor near $98,300 before rebounding sharply. This reading remains well below the euphoria zone 80,000 plus seen during prior peaks, indicating that current buying power is robust, yet not overheated. In other words, positive sentiment is building gradually, rather than in a manic stampede scenario that typically yields more durable uptrends. Delving deeper into futures positioning, the net position in BTC futures contracts has flipped positive, with longs reaching $27.4 million and remaining above zero for more than 24 hours. This marks trader accumulation of long exposure, even as price consolidation continues between $105,000 and $110,000. Consider this in light of the recent weekly price action. After printing its strongest weekly candle in months, BTC corrected from $109,500 back to $108,000, briefly forming a double top pattern on lower time frames. However, the fact that price respected the 200-day EMA on the hourly chart and rebounded underscores that selling pressure is being absorbed by buyers. Another encouraging signal for the bull camp. No breakout campaign is linear, shallow. Retest is healthy, and in Bitcoin's case, the next logical pullback area lies around $107,300, corresponding to a prior liquidity zone. If price dips below $107,000, it could even fill the $107,000, $106,300 gap, a move that would complete a textbook correction. Yet history and on-chain data tell us that BTC buyers eagerly defend such levels. To avoid a deeper crawlback to $105,000, Bitcoin must exhibit strong absorption below $107,000, swiftly soak up orders, and reclaim $108,000. As long as that happens, the path to the upside remains clear. On the way to the coveted $112,000 milestone, Bitcoin's immediate hurdle is $109,500. A decisive close above that figure not only invalidates the recent double top pattern, but also rigors event-driven buying from momentum strategies and short covering flows. In that scenario, first resistance gives way, and BTC can aim squarely at $112,000, the psychological and technical target, marking a new high. Most importantly, a break above $109,500 sends a message that the bulls are in full control. Overnight funding rates would turn more positive, Open interest would likely accelerate, and spot flows, particularly from institutional ETFs, could surge, accelerating the impulse. Bitcoin is now closed above $100,000 on every candle since May 8th, 2025, a feat echoed only during the most emphatic phases of past bull markets. Even the pullback to $98,300 on June 22nd failed to break that psychological floor. This resilience speaks to the growing conviction among long-term hodlers and strategic investors who view BTC as digital gold and a hedge against macro uncertainty. Supporting this is CryptoQuant's 30-day exchange inflow-outflow ratio, which has fallen to 0.9, its lowest reading since the 2022 bear market bottom at $15,500. A ratio below 1 indicates that withdrawals outpace deposits, meaning investors are taking coins off exchanges to accumulate rather than sell. Historically, this metric has marked cycle lows and prefigured sustained rallies. Even more remarkable, the derivatives market on Binance has absorbed relentless short-selling activity for the past 45 days, yet Bitcoin's price has remained stable in the $100,000, $110,000 band. The cumulative volume delta CVD turned negative, signaling net short aggression. But the absence of a deep drop underscores that these shorts are being soaked up by buyers. This dynamic sets the stage for a classic short squeeze as Bitcoin breaks higher. Short positions will be forced to cover, fueling rapid upward moves. In a market still digesting the June corrections, that squeeze could be the spark that ignites the next parabolic wave. On-chain data further validates the bullish thesis. Analyst Martin reports that over 19,400 BTC worth roughly $2.11 billion has been transferred from wallets dormant for 3 to 7 years into institutional custody addresses. These are not retail traders rebuying small amounts. These are large-scale reallocations by entities seizing a stable price window to accumulate. Their strategic movements imply a long-term horizon and confidence that Bitcoin's next major leg up is at hand. From a technical standpoint, Bitcoin is now trading between the 20-day EMA at $107,314 and immediate resistance at $110,530. The upward-sloping 20-day EMA, coupled with an RSI, comfortably in positive territory, confirms that the uptrend remains dominant, but the most compelling structure is the emerging inverse head and shoulders on daily and weekly charts. With a neckline hugging the $111,980 ATH, a successful break above $110,530 sets up the retest of $111,980 as both resistance and the completion point of the pattern's neckline. Once cleared, the measured move target skyrockets to $150,000, a figure many thought audacious just months ago, while sellers are expected to defend the neckline fiercely after all. It's the level that defines the long-term trend Bitcoins. Melting of sell walls at lesser hurdles suggests the market's structural evolution. Demand at $107,245 remains rock solid, with every intraday dip met by robust bids. All the pieces of the puzzle are falling into place. Futures OI, recovery signaling new leveraged interest. Market power index confirming constructive momentum without. Mania.net, long build-up and absorption of selling. It's pressure in spot and derivatives markets. On-chain metrics showing withdrawal-driven, accumulation, institutional whale transfers, and custody inflows. Technical alignment from EMA, support to inverse H&S patterns. With $112,000 on the horizon, the next phase of Bitcoin's evolution is about to unfold. A decisive break through this level won't just mark another cyclical high, it will represent Bitcoin's ascendancy as an institutional asset class, resilient to macro shocks and capable of coordinated, explosive moves. Imagine the scene: short sellers scrambling to cover ETFs, scooping up shares, whales unveiling fresh cold storage addresses, and retail retracing their charts only to see candles etch new records. That moment is coming. Bitcoin is absorbing sell-side pressure with unprecedented efficiency. If it can overcome the last few $1,000s of resistance, The path to a new ATH, and potentially to $150,000 and beyond, will be clear. Buckle up. The explosive move is imminent. $112,000. It's just the beginning of a new chapter in Bitcoin's legendary story.